Welcome to this explainer. Look, you already know the stakes here. Business finance literally dictates survival. But today, we're looking way past the standard spreadsheets. We're going to expose the hidden mechanics of why some companies absolutely take off and why others unexpectedly crash and burn. If you're ready to really understand the essential machinery of how businesses truly operate, you're in the exact right place. Let's get into it. Okay, let's dive into this. Imagine two businesses side by side. On the left, we've got a company generating a massive $100,000 in profit every single year. And on the right, a smaller business pulling in just $30,000 in profit. Now, if I asked you which one is more successful, you'd probably point straight to that 100K business, right? I mean, it just makes intuitive sense. But here's the massive surprise. That first business, the one making 100 grand, it goes completely bankrupt. Meanwhile, the second business survives, thrives, and just keeps scaling. So, why exactly do that $100,000 business go bankrupt? How is that even mathematically possible? People so often assume that high revenue or even high profit equals guaranteed success. But we're going to reveal the true killer of businesses today. We're looking past the illusion of those big, flashy numbers to uncover what actually happens behind the scenes that causes a seemingly successful company to just collapse. Section 1. The engine of business. Understanding the basics. At its core, business finance isn't just boring accounting. It's the active management of capital flowing through a system. You don't need an MBA to get this. Every single organization out there, from your local coffee shop all the way to a global tech giant, operates on this exact flow. If the cash coming in outpaces the cash going out, well, you've got the capacity to scale. But if that capital leaves the system faster than it arrives, the whole thing eventually collapses. It's a constant flowing dynamic. Actually, think of capital kind of like the fuel system of a luxury sports car. You could have the most gorgeous vehicle in the world. We're talking flawless design, leather seats, an incredibly engineered motor. But with absolutely no fuel in the tank, it goes nowhere. It's literally just a heavy, expensive metal box. Likewise, you can have the absolute greatest, most innovative business idea on the market, but without proper finance actively pumping through its system, that brilliant idea simply won't survive the journey. Section 2. The illusion. Revenue versus profit. Let's clear up the most common confusion here. So, we all know revenue is basically just sales coming through the door. Yet countless founders fall into this trap of celebrating it as their sole, ultimate metric of success. They're popping champagne because they hit $1 million in top-line growth. But here's the thing. Revenue is only half the story. Relying on it without looking deeper at your overall financial health is incredibly dangerous. Let's break it down. If you have a $10,000 revenue month, but it costs you $7,000 to execute, covering rent, materials, shipping, and ads, your actual yield is just $3,000. That margin, that is what actually matters. It's the tangible value left in your hands after the cost of doing business is fully settled. And the crucial point is really this. Revenue shows activity, but profit shows performance. Revenue is just volume and noise, right? It's the sheer amount of stuff happening in your store or on your website. Smart entrepreneurs, though, they focus entirely on profit because profit is the true indicator of how well the business is actually performing. You can literally have millions in revenue and zero in profit, which essentially means you're just doing a whole lot of exhausting work for free. Section 3. The big reveal. Cash flow is king. Okay, the metric that truly dictates survival is cash flow. This is the actual physical movement of money in and out of your business on any given day. And here is the massive hidden problem that traps so many hardworking founders. A business can be entirely profitable on paper, but still completely run out of cash. Boom! That solves our opening mystery. Our bankrupt $100,000 business absolutely had profit on their accounting documents, but their cash flow was totally broken. And this brilliantly illustrates the trap. Imagine you sell products to a big corporate client worth $50,000. Awesome, you've got profit locked in. But the contract dictates a 90-day payout. Meanwhile, reality hits today. Salaries, rent, suppliers, utility bills, they all need to be paid right now. So you have paper wealth, but absolutely zero liquidity to survive the week. This invisible timing gap is the ultimate business killer. Listen, if you take away just one concept from this whole explainer, let it be this. Profit is theory. Cash is reality. Seriously, always remember that soundbite. You cannot pay your loyal employees with profit theory. You can't pay your landlord with a promising invoice. You can only meet those obligations with cold, hard cash reality. Section 4. The dashboard. 3 essential financial reports. Together, these 3 reports are basically the dashboard metrics for our metaphorical car. First up, the income statement. It asks the foundational question, did we make money? By tracking revenue, expenses, and profit over time. Then, the balance sheet. This reveals your true standing by comparing what you own versus what you owe. But the granddaddy of them all, the cash flow statement, answers the ultimate survival question, where is the cash moving right now? Tracking that real-time movement is often the single most critical factor for keeping the doors open. Section 5, the rules of the road. Smart money management. Let's move to and see how this builds the actionable principles successful businesses use to survive.
All right, here is your definitive mentor checklist for financial survival. Ready? Rule 1. Budget before spending. Know exactly where capital is going before it leaves. Rule 2. Track every single expense. Rule 3. Keep personal and business money strictly separated. Rule 4. Build an emergency fund to buffer against those inevitable unexpected problems. And Rule 5. Review your numbers weekly, because founders who actually understand their metrics consistently make the sharpest decisions.
Now, to really underscore rule number 2, I want you to remember this truth. Small leaks sink big ships. Unexpected problems always happen, and it is rarely the huge, obvious expenses that kill a company, right? It's the unmonitored software subscriptions, the tiny daily material waste, things that silently drain cash reserves over time and completely destroy an operation from the inside out. At the end of the day, businesses do not fail for lack of ideas. They fail because they simply run out of money. It really is that foundational. But by mastering the simple mechanics of revenue, profit, and cash flow, you completely shift from operating on hope to operating with total, empowering control over your own growth. Which leaves us with one final, kind of provocative question for you to ponder. Will you let your business run on theory, just relying on paper profits and crossing your fingers? Or are you ready to master the reality of your cash flow? The choice, and the ultimate survival of your business, is entirely up to you. Take control of that dashboard, watch out for those small leaks, and steer your business toward lasting success.